Gold declined the most in 2 weeks as a stronger U.S. dollar reduced demand for the precious metal as an alternative asset. My next guest, though, is quite bullish on gold. He says that over the next 5 years, the price of gold could double from current levels. Joining us now, Frank Holmes. He helps manage $3 billion as the chief executive and chief investment officer of U.S. Global Investors. Frank Holmes, always a pleasure. Tell us about your gold thesis. Why is it going to double in price over the next 5 years?
When you take a look at emerging market money supply growth, it's been averaging close to 20%. And anytime you have money supply growing at that rate, it's very easy for the price of gold to double over 5 years. It's a simple math formula. Also with that, and the backdrop of that, is the competitive currency devaluation that's taking place, in particular the G7 countries, as everyone's battling to deal with economic growth. So I think it's another factor that's important. And then there's going to be Basel III's coming out, where gold's going to be treated differently as a reserve for banks. So they've been selling their gold in Europe to buy sovereign debt like Greek bonds. And that's going to change in the next year.
All right, so you've got a trifecta of reasons. You've got more money sloshing around the emerging markets. That gives people more money to buy gold. Then you have this idea that fiat currencies, they are going to decline in value, or at least try to decline in value relative to each other. And then the idea of using gold reserves as a way to shore up government finances. So what's the best way for investors to profit from this trend?
Well, the first thing is in the short periods to take a look at the volatility that takes place. And it's a non-event for gold to go plus or minus 15% over any 12-month period. And anytime it has a correction of over 15%, it's usually quite attractive to take a look as buying. If we look at inflation numbers the previous month, they're 3.8%. And in Treasury bills, you're basically earning 10 basis points. That means you have a negative real interest rates. And in most countries in the world right now, you're earning negative real rates of return. And at any time that takes place, gold becomes attractive. And when we have this currency volatility and the gold comes off 15, 20%, it's more than attractive to buy.
All right, so attractive to buy, but do you buy gold that's already in the ground? In other words, do you buy gold mining companies, or do you go out and buy gold that's already been put into bars and coins?
It's an excellent question, Pimm, because what's taken place in the past year is that gold is traded up, whereas the gold stocks have been sold with all other equities, and gold mining companies are trading at historical low valuations, and same with energy companies. So recently, in the past couple of months, we're seeing that the cheapest reserves in the ground are actually not in the ground, they're listed. They're listed public companies, and we see Petrohawk being bought out by BHP, $15 billion transaction. The stock jumps 50%. We're seeing Sinopec just bought another oil company, Daylight, 120% premium to its stock price. And then in the gold sector, we saw Great Resources traded up at a 70% premium when Agnico Eagle took them over. So we're starting to see mid-cap and big-cap companies coming in and purchasing because the least expensive reserves are listed, and a lot of these reserves that are out there do not have the environmental issues. They're already basically in production, going to production. So we like to look at those companies that have the opportunity to be acquired or have very strong production profiles.
So Frank Holmes, for example, what would be a mining stock, a gold miner, that you think would be worth buying now?
Well, Randgold's one of our biggest holdings, and there's a great company. It's in all over Africa. It's a big producer. It is listed on the London Stock Exchange. It is a company that is well managed. It's been growing its production on a per share basis. The CEO is very conscientious and respectful of shareholders, valuation on a per share basis. The other one is Eldorado Gold. Eldorado has just come out with a dividend policy similar to Newmont, where it's linked to the price of gold. As the price of gold trades higher, they're going to increase the dividends paid out to investors. Eldorado Gold has huge operations in Turkey and China, and I think that that's also is a unique, low-cost operator in the space for gold producers. And then when I see these takeovers like Great Resources at $140 per ounce of gold in the ground, and I look at companies like Gran Colombia, here's a company trading at $30 per ounce of gold in the ground. I think that this stock is one of those companies, as we go through this process of expanding their operations, the high potential being taken over.
All right, Frank Holmes, last point to you. What's the love trade?
The love trade. The love trade is this natural affinity for the half of the world's population to give gold as a gift for eternity, for weddings, for religious holidays. So you see that we go from Ramadan, now we're entering in India, the season of lights, the Diwali season. We have the wedding season. Then we're going to have Christmas and Chinese New Year. This year is the year of the rabbit. Next year is the year of the dragon. So I think that this is important for investors to realize that 50% of the gold demand is for love.
All right. Well, we love having you on. Frank Holmes, Chief Investment Officer, Chief Executive of U.S. Global Investors. All right.